Palantir investors need to know what CEO Alex Karp just did. This is probably the reason why the stock tanked today. He just made a huge move that can have severe implications on its price in the coming future too. Welcome back to Fire Stocks, where we talk about tech stocks like Palantir and NVIDIA. Please like this video, leave a comment, and share it with your friends. It'll motivate us to make more of such well-researched videos for you every single day. Before we talk about what Alex Karp did, let's look at the biggest news for Palantir that could be very beneficial for its price. Palantir has secured a multi-year strategic partnership with SAUR Group, a global leader in water distribution and wastewater management, to enhance contract management through AI-driven solutions. The collaboration will use Palantir Foundry's generative AI to streamline SAUR's complex contract management processes. With Palantir Foundry, the company can automate and analyze large volumes of contractual data, making processes more efficient and transparent. This partnership underscores Palantir's expansion into commercial AI applications beyond its dominant government contracts. Palantir CEO Alex Karp has consistently emphasized AI's role in transforming industries beyond defense. And this deal highlights how private sector enterprises are now leveraging Palantir's AI tools for critical business operations. This partnership could boost Palantir's commercial revenue, addressing investor concerns about the company's reliance on government contracts. The company's stock has already surged over 1,700% since early 2023, fueled by AI expansion, institutional investments, and speculation about a potential stock split. Analysts believe such deals validate Palantir's AI capabilities, making the stock attractive for long-term investors. As corporations adopt AI-driven solutions, Palantir is well-positioned to secure more commercial partnerships in industries like healthcare, energy, and finance. Now let's talk about what the CEO did. Alex Karp implemented a new trading plan under SEC Rule 10b-5-1. Authorizing the sale of up to 9,975,000 shares of Palantir stock by September 12, 2025. This plan supersedes a previous arrangement that permitted the sale of up to 48.9 million shares, which was canceled in November 2024. At the current trading price of $123 per share, this new plan could result in the sale of approximately $1.23 billion worth of shares. In 2024, Karp sold a total of 40.7 million shares, amounting to $1.95 billion at an average price of $47.99 per share through at least two prior trading plans. During the fourth quarter of 2024, Palantir's stock price doubled, significantly outperforming the S&P 500's 2% increase. This upward trend has continued into 2025, with Palantir shares rising by 60%, compared to the S&P 500's 4% gain. The adoption of a Rule 10b-5-1 trading plan allows corporate insiders to sell a predetermined number of shares at specified times, aiming to prevent accusations of insider trading by establishing the plan while unaware of any material non-public information. However, significant insider sales can sometimes raise concerns among investors about the company's future prospects. The potential impact of Karp's planned stock sales on Palantir's share price could vary. While such sales are often pre-scheduled and not indicative of the company's performance, large insider sell-offs can lead to increased volatility or a decline in stock price, especially if investors interpret the sales as a lack of confidence in the company's future. It's important to note that insider sales can occur for various personal reasons and do not necessarily reflect the company's health or prospects. Investors should monitor Palantir's stock performance and consider the broader context of Karp stock sales, including the company's financial health, market conditions, and upcoming product developments, before making investment decisions. He has engaged in several significant stock transactions since the company's public listing. In 2024, Dr. Karp sold a total of 40.7 million shares, amounting to approximately $1.95 billion, an average price of $47.99 per share. These sales were conducted under at least two trading plans established in accordance with SEC Rule 10b-5-1. In November 2024, Dr. Karp canceled a previous trading plan that authorized the sale of up to 48.9 million shares. Subsequently, he adopted a new plan permitting the sale of up to 9,975,000 shares through September 12, 2025. Based on the recent trading price of $123 per share, this new plan could result in the sale of approximately $1.23 billion worth of shares. Earlier transactions include multiple sales in 2021, where Dr. Karp sold shares in blocks of 1,915,887 on several occasions, with prices ranging from $20.68 to $25.45 per share. These transactions were part of structured trading plans and were reported in compliance with SEC regulations. It's important to note that insider sales can occur for various reasons, including personal financial planning, tax obligations, or portfolio diversification. Such transactions do not necessarily reflect an insider's perspective on the company's future performance. The impact of this massive selling was seen today as well. The day's trading range has seen a high of $125.39 and a low of $110. This is a massive shock to all investors. Meanwhile, all the analysts are saying that they knew this is going to happen. Some analysts have been exercising caution, highlighting the company's high valuation and potential market pressures. Still, at the same time, Wedbush Securities' Daniel Ives has raised his price target from $90 to $120, expressing optimism about Palantir's AI software, AIP, and its potential to secure significant federal AI investments. Ives' analysis underscores the multifaceted growth of AI across the tech sector, highlighting both opportunities in emerging AI applications and the resilience of established technology providers amidst increasing competition. Ives emphasized that AI is transitioning into its next phase, with second and third derivative plays emerging as significant opportunities for investors. He highlighted companies like Palantir Technologies as prime examples of this trend, noting their pivotal role in the AI revolution. We need to understand that Palantir has witnessed a remarkable surge in its stock price, nearly doubling to $124 this year, following robust fourth-quarter results that showcased a 36% increase in revenue and earnings, surpassing expectations by 30%. This is not a small feat for any stock. But despite this impressive performance, concerns have been raised regarding the company's valuation. Currently, Palantir is trading at approximately 74 times its projected $3.75 billion in sales for the year, a multiple that leaves minimal room for error should growth decelerate. Historically, the stock has faced declines after peaking significantly above its 50-day moving average. Analysts, including Deutsche Bank's Brad Zelnick and Mizuho's Greg Moskowitz, advise caution due to the elevated valuation, with price targets set at $50 and $80, respectively. The prevailing market conditions and anticipated slowdown in AI-related spending growth suggest that investors might consider a prudent profit-taking approach. The prevailing concern is that Palantir's valuation may have outpaced its actual financial performance. While the company's AI-driven platforms and extensive government contracts have contributed to its revenue growth, analysts caution that if the current enthusiasm surrounding AI and big data were to wane or fail to meet lofty investor expectations, Palantir stock could be vulnerable to a substantial decline. This sentiment is echoed by the Motley Fool, which points out that the company's high valuation poses inherent risks, especially if market dynamics shift or projected growth trajectories are not realized. Do you think we're going down from here? What's the likelihood? Drop a comment below and let us know.